Healthcare REITs have been dominating the market. They've been growing very quickly in the senior housing side. And I'm here today with Justin Hutchens. He's the CEO and President of National Health Investors. Justin, when you came on board 3.5 years ago as president of the REIT, did you have any idea that you would be growing the REIT like you have? I mean, I think you've more than doubled your assets and more than tripled your market value in the 3.5 years you've been there.
Well, Steve, we've had some unique opportunities open up for us. One was the low cost of capital environment with the low interest rates, which helped to generate large cap deals and leave a small one-off asset and small portfolio marketplace open for us. So we filled a niche that was needed, and that was for regional companies that had development plans, acquisition plans, to be able to deal with a smaller shop like NHI, deal with decision makers. We've added 11 new customers over that time frame. Half of those have come back for repeat business, which has really helped to generate our growth and help to keep us out of the open market bidding market that occurs.
Right. And when you came on board, I mean, I always thought of NHI as more of a skilled nursing focus. You've been growing a lot in the private pay senior housing side. Has that been by design, and do you have any kind of percentage mix you're looking for?
The plan has been to diversify. When I arrived at NHI, we had 80% skilled nursing. We also had one tenant that supported 80% of our revenue. And in order to attract the institutional investor base, and just to give our shareholders and ourselves confidence that we had a very reliable income stream, we knew we had to diversify. So we've diversified into private pay. We've acquired senior living campuses. We've acquired assisted living communities. We have also been buying skilled nursing along the way, but when we've been doing so, it's been newer assets that we feel would have relevance for years to come. Very high quality assets, high quality mix. The net result has been to reduce our skilled nursing concentration down to around 50%. The senior living campuses and the assisted living are about 35%, and then what's remaining are some mezz loans and then some investments in hospitals and medical office buildings. What I would think will happen, we're a little bit ahead of schedule, by the way. We thought we'd be down to 50% in the next year or two. We're ahead of that game plan, and I could see the skilled nursing dropping a little lower, but not a lot, because we still do have a lot of confidence in skilled nursing as well, and so we'll look to make opportunistic investments there moving forward as well.
How about a mix between new customers and doing business with existing customers? Is there any target with that?
We don't have a specific goal in mind. We have a handful of existing customers that we've also done some repeat business with over the past few years, and will continue to help support their growth plans. And of course, we're always on the lookout for regional companies in particular that have growth plans and are looking for that personalized approach that we offer. We'll be happy to bring new customers into the mix. But there's not really a target in mind. The only real target we have is to make sure that we're being responsive to new customers, existing customers, and helping them to fulfill their growth plans.
And for a new customer coming in, is there a minimum kind of deal size you're looking at, or is it really just who that customer is?
Our smallest deal has been a $650,000 mezz loan.
For a new customer?
For a new customer. Our largest deal, when this was an existing customer, was $135 million. And so we have a wide range in terms of deal size, capability, and interest, because what we're first and foremost interested in is meeting our customers' needs, and they don't always need a $50 million acquisition. They may just need a $1, $2, $5, $10 million capital infusion, and that could lead to more business down the road.
How about your home office? I mean, are you still lean, or are you growing that with your growth?
Well, we've doubled our FTEs. We're up to 11 employees. we have the leanest REIT management team in the entire REIT industry. I'm pretty certain. In the publicly traded REITs, healthcare or otherwise. But what we've done that I'm proud of is we've hired people that are very well educated. We're growing from within. We have people with finance and economic backgrounds and accounting that we've brought on board. That's helped to really solidify our bench strength and help some of the rest of us to continue to focus on the business development and raising capital.
Mm-hmm. And let's talk about the RIDEA type transactions. You have one major RIDEA joint venture partner, Bickford Senior Living. I assume that is going pretty well?
It's going very well. My initial reaction to the RIDEA structure was I wasn't fond of it for healthcare REITs. And the reason is I have an operating background, and I have a real deep understanding that operations have both up and downside risk. And the idea of subjecting a REIT, which is historically attracted investors looking for a very reliable income stream, to operating downside risk wasn't attractive to me or the rest of our management team. When we found Bickford, and we started doing triple net leases with them, they had an interest to do development. We had an interest to finance their development based on their 20-year track record of having success in doing so. And I found myself very comfortable with the fact that, for instance, over a 10-year period, their same-store operations grew on an average of 6% a year NOI. We get it 3% in an escalator, and banking on their track record gives us the opportunity to get some more potential growth. So we entered into the joint venture. We started with 10 properties. We're up to 30 now, and I think there'll be potential for that to grow more. We'll be happy to consider doing the RIDEA structure and joint venture with other operators. We're always going to be mindful of that operating track record, though. And I do think it's a relatively small group of operators that have over 10 years of experience taking care of seniors and creating value for their shareholders, and we're looking for the very experienced operators if we're going to subject ourselves to any kind of potential downside operating risk.
And how important is the new development side of the RIDEA joint venture, where once it's built you can add brand new buildings into your portfolio? Is that a key component of it?
It is when you're dealing with an operator that has a development background. We're very confident because they have 49 properties and 42 of them they've built. It's the same model that they've been running for 20 years. So if we were going to move into development, Bickford was an ideal partner for that. It definitely does help the returns. We also like the opportunity to expand on some of their existing campuses with new construction. We might do some new acquisition, but with this particular operator, they really enjoy running their model, building their model in their select secondary markets, and we'll continue to focus there. But I wouldn't say the construction was a reason to do the joint venture, but it certainly in the long run is going to help to juice the returns of it.
No, absolutely. And then for 2014, do you think you're going to have as active a year as 2013? You hope?
You know what? I'll be honest. We're actually ahead of schedule, and we're a very selective, conservative company, and we've really stuck to our selectivity. Probably had opportunity to grow with even more volume, but we're being very picky about operators and assets and making sure we have a perfect fit on every investment that we make, at least as perfect as it could be at the time. And so fortunately we found enough to actually get ahead of what our growth goals, our stated growth goals, and so if the opportunity is there, it's high quality, it's an experienced operator, it's a generally a private pay asset or a very high quality skilled nursing facility with long-term relevance, then we'll consider making the investment. And we're going to go one investment at a time, and hopefully that we'll continue with a brisk pace. But we'll just have to wait and see.
All right. Well, so maybe you're going to triple your size in another 3 years?
Yeah.
No, I'm on no commitment. Public company, you can't say
Yeah.
anything like that. Anyway, well, good luck, and you've done a great job so far, and wish you continued success.
Thanks. I appreciate it, Steve.
Okay.